Hi everyone, I'm Damien.
And I'm Jeremy.
Welcome to our Suburb Data podcast, where we cover everything from property investing to expert busting. If you're new here, we share our personal and professional experiences from over 20 years in the game. So you skip the mistakes we made and go straight to property investment success. Jez, today's a big one. Is a buyer's agent really worth it in today's market? Because buyer's agents, like Uber drivers, they're everywhere. The supply is there, but is the demand?
Yeah, I don't know. Take us away.
So I'll start with, what does a buyer's agent actually do for people that don't know, and how's it different to a selling agent?
Well, the selling agent acts on behalf of the seller and the buyer's agent acts on behalf of the buyer.
And it's definitely, I would say, a lot more prevalent now, buyer's agents. Like maybe, 10 years ago, 15 years ago, wasn't a big thing. But now all over social media, everyone is a buyer's agent. And I guess the main thing is that they work for the buyer. So they filter out properties, negotiate, do all the due diligence. That's really where the value add is. And look, there's going to be a lot of buyer's agents that get hammered, but it's like any industry. There's some good ones and not so good ones. So it's really about trying to find someone that you can align with and trust to work your way forward, because like I said, a lot of them do get hammered within the industry, don't they?
There's I suppose if the industry is better at, the professionalism, the level of professionalism, if they knew exactly what investors were after and could deliver on that with regularity, it wouldn't be such a big deal. But we see so many cases of buyer's agents thinking they're knowing what they're doing and they've got no idea.
That's right. And a lot of them, I guess every state is different, but there's like a specific license that you need. So a minimum is a certificate of registration, and they must work under a supervised, like someone that actually has the full real estate agent license. That's like a Cert 4 in the real estate practice to get that full license. So you need that Cert 4. And then typically what they'll do is they'll get mutual recognitions in all the states. So they might do their certificate in one state. And this is where I think it could be dangerous, because a lot of people can get into the industry without any experience in property at all. And they're giving this advice that could be life-changing for a lot of people. But I always bring it back to, work out what your strategy is and then hone in those markets. And the buyer's agent can help you secure that property. So it just depends. Do you have the time to go into that market and try and secure that property? That's the biggest thing. And they can hold your hand through that whole process.
Yeah, well, the first question I get from a lot of clients over the years on DSR data, Jeremy, I can't even get a foot in the door. These agents won't return my call. And the best advice I can give them is, you're in the right place. At least demand exceeds supply. That's the sort of thing you can expect. If they need help, they have to go the way of a buyer's agent.
And there's a lot of, I guess, like I know in New South Wales and I think Queensland's implementing it now, but like continual professional development too. So that's the thing that you need to do. You might need to attend a seminar. But look, at the end of the day, I would just say that if you are acting as like a buyer's agent, it could be for like your owner-occupier is most probably one part. But I think if you're looking for an investment, they can really help. But you just got to be careful that you just don't blindly trust them. At the end of the day, you got to do some of your own due diligence. And I would say if you have engaged a buyer's agent, I would look at, for example, market metrics tool on our platform and go, okay, well, what's the DSR3 of that market? Not just the suburb, but maybe that local government area to understand, well, is that market growing? How much is it grown by? And put that back on the buyer's agent. Well, why are you buying into that pocket? Is it just because they've got their business already established there, or they're open to looking at, or are they open to looking at other markets?
Yeah, I think probably one of the big negatives about the buyer's agents is the ones that do just buy only in their backyard. There is some benefit to it, meaning that they know, how much to pay. For a property on this street, you shouldn't pay anything more than 1.1 mil or something like that. But what are the chances that suburb or even that whole area is going to be the next growth location? So you really do need to have a borderless approach. But once you've found a an area that you want to target because it's got all the right data pointing towards it, then it would be great to have a local buyer's agent because you're unlikely to overpay if you use the local buyer's agent.
And I guess what are the biggest advantages of having a buyer's agent in your corner? So let me start with the first one. I think time savings is most probably the biggest one. You don't have time to do it yourself. You don't have the expertise to, I guess, go to the opens, just work out if the property is suitable for you. Because at the end of the day, you might cross off a property because it's an irregular block size, or it might be near a main road, or it might be noisy, or it might be public housing. Like there's so many things that you can just go, no, I'm not buying that because of this reason. But at the end of the day, if you put that all aside, that suburb does the heavy lifting. If you can put more in your favour, you will, but it's going to be a lot more difficult in a moving market because there might not be a lot of properties available.
Yeah, that's right. That would be one reason why I engage the services of buyer's agent, because my time is spent better doing other things. I'll let the expert do what they do. I'll be an expert at what I do, and I'll pick the market to buy in. But yeah, I need someone else's expertise to pick out a specific asset.
Now, negotiating better deals, that would be another reason?
Yeah, I'm terrible at negotiating.
Well, it can be difficult because I guess it can be tricky with agents. I think negotiating is definitely there. But for example, like in a lot of the Melbourne markets, a lot of it's transparent and going to auctions. So you might get that off-market opportunity potentially if the buyer's agent already has a relationship with someone and someone may need to move that property on really quickly without going to the market. So i.e. maybe they've run out of funds or they're and they need to get rid of the property quickly instead of going through a massive campaign. So it's those, I think the relationships are also really important that the buyer's agent has built up in that pocket, because it's very hard for them to service all the different areas because they're on the ground in that specific area. As an example, they're going to those open inspections and that's what they know.
Yeah, I think it takes a special kind of person to be a buyer's agent. You're always on the phone, aren't you? That sort of thing drives me mental. So, yeah, the whole thing you were saying, you build up relationships, that sort of thing. Yeah, I'd rather hand that over to someone else.
And the other one is guidance through the process. So, again, someone's holding your hand through purchasing that property. At the end of the day, you still make the call as the investor. The buyer's agent is there just to sort of help you along the journey. They're not making that decision for you, but they're putting it out and saying, look, and the way I would look at it is, well, would I buy that property?
Yeah.
That's the way I would always look at it. You don't want to sell it to a client just to get them over the line. You want to make sure, I always think, would you buy it?
Yeah, it's a great check.
And as long as it's structurally sound, I don't think you can go wrong. Risk management, I would say, is that maybe like another one. So maybe identify zones. You might have like red flags. Look, for me, it really comes down to the price point. But if you've got like 5 properties within a suburb that are selling, you might cross off 4 because of a certain reason. But yeah, I think it's just one of those ones where they'll potentially tell you, hey, maybe this is too close to the main road or it's too noisy or whatever it might be. But again, that's factored into the price. But I can understand that owner-occupier appeal that maybe if you did sell down the track, you might have more eyes. But the suburb does the lifting, doesn't it?
Yeah, that's right. I think that a lot of those features, like a noisy road, for example, they dictate the price, but they don't dictate the capital growth.
That's right. And the other one is, I guess, data versus gut feel. So with the data side, anyone could manipulate it. They can give you a report going, population growth, this, that, to go, this is why we're buying into that area. So it's just their opinion, what they think, why they think the area is going to grow. So what would you say to that? Like, data can be manipulated, can't it?
Yeah, someone needs to understand the data. Like, for a novice investor, seeing just about any report on an area, they're going to be impressed with all the metrics, all the data. And like that example you gave of population growth, they're going to think, oh, this sounds really positive, not realising how irrelevant a lot of those metrics that they've read are. So, yeah, you can get some old school buyers agents who swear by close to the CBD, buy in blue chip suburbs, buy, follow the money, buy in affluent areas. And, of course, historical data shows that's all nonsense. But to the novice investor, how are they going to know that that's that is nonsense, they're going to be impressed by it. Oh, look, you've followed the data. So, yeah, you're right. Data is important, but you need someone who's an expert at data.
You'll see this selling point a lot from a lot of marketing, off-market opportunities and under-market value. I think with off-markets, look, if I had a property, it's going on the market. If I'm selling,
Oh, yeah.
like you have to think about it that way, don't you?
Yeah, that's right.
Because you get the most eyes on it.
And every off-market purchase is a kick in the groin to capital growth because everyone else sees the same purchase and go, oh, I want an off-market one. I want one that's cheaper. So the definition of capital growth is a whole bunch of buyers paying above market value. So you have one who's paying below, 2, 3. The more you have that are paying below market value, the more you've got a market that's heading towards negative growth that does not have demand exceeding supply. So in the hottest markets, you cannot buy under market value. Buying off market value is very difficult because you just put the property on the market, it's gone in a couple of days and for the price more than the price you wanted.
I think with that off-market opportunity, again, it just comes down to relationships. That's what I've noticed with buyers agents. Like a good one is the relationships. That's what they've really got. That's their. That's what they do daily.
On the phone,
they're
all
on
the time.
They're on the phone. They've got those relationships, so they might come across an off-market that we could move on. But again, you still need to put your filters in place, like things that you don't want the property to have. So for example, they're the different things, definitely. And the other advantage is maybe like obtaining quotes for a renovation. So you might buy something that's a little bit older and you want to add a bit of that value. It's also their network that they have, one with the property manager, but also dealing with the trades.
Right, yeah. So you don't have to figure out, who's a good plumber in this area, who's a good sparky, yeah.
Because a lot of the time what I think an investor will do when they're not using a buyer's agent, they'll just get a video walkthrough from the property manager and give them the listing afterwards.
Right, yeah.
You know what I mean? So again, like that's another strategy that you could do. It takes a bit more time. But the other one is the emotional buffer. So for me, it's an interesting one. You've got clients that they've got a price point. Let's say it's $750. They go buy it. They just, yep, I agree with what you say. Let's just get the deal done. And the sooner they get into that moving market, the quicker they're going to get that capital growth. But there might be things where they go, I don't like this property because of the color of the paint in their house. Like different things. I don't like the gardens. All these things that they become emotional with. That's what I've noticed because a suburb, I harp on it a lot, the suburb does the heavy lifting. In 18 months' time to 24 months, you get that valuation and the area you'll realise that property, as long as it can get rented out, you'll get that capital growth, won't you?
Yeah. So you for emotional buffer, you're saying that all these sticking points, the BA can help them
maybe make the
them.
decision. Yeah, just see through that. And look, some people are going to keep pushing back, but at the end of the day, like the buyer's agent's there to help you. If you keep saying no, you're the one that's missing out. They can only do what they can for you. So I think
we've had clients like that, haven't they? They've turned their nose up at every property we offer, and 6 months later, we realise they're behind by like $80,000.
And there's nothing wrong with that. Like I think definitely you just have to let a little bit go. Similar to our episode a couple episodes back about is there a perfect suburb? At the end of the day, nothing's 100%. Even when you buy like a used car, for example, there's always going to be bits and pieces that aren't perfect, correct?
Yeah, that's right, yeah. It's more about timing than it is about the property, even about the suburb. It's really about the timing of the entry. But you can understand, especially for a first-time investor, if they're allocating even just to say $500,000, they would be very cautious. And, yeah, there are opportunities. They say, what is it? The opportunity of a lifetime comes around pretty much every weekend. So, yeah, I would caution investors, don't be in a rush, but just realise that if you have paralysis, it is going to be costing you.
And I think you're right, analysis paralysis is most probably one of the biggest ones. I know I've had it in the past, but now I realise as sooner that you get in, hold on to the property, sit back, that's where that capital growth happens.
Yeah, it's a double-edged sword, isn't it? You get in too slow and you lose money. You get in too quick and you could have the same problem.
Look, local market knowledge, look, yes and no. You can do a lot of your research from home. if you really wanted to. Like, again, as I said, the suburb does the heavy lifting. So if it is like an irregular block, or you're on a main road, or there's public housing or crime, whatever it might be, at the end of the day, that's priced into the asset. It really comes down to what is your budget. So if you've got a budget of 800,000, but you're buying into a suburb where the typical value is $1 million, well, what's your compromise? You have to compromise on maybe the location within that actual suburb, correct?
Yeah, that's right. And I would use a local expert to determine price. What do you think this is worth? What do you think I'd need to offer in order to get this one across the line? But I wouldn't use the local knowledge for what's the best street to own in for capital growth or something. They don't know that, but they really are intimately involved at the coalface, and they really know property price.
All right, moving forward, I've got an example. Actually, this is historical charts. So let me bring it up on the screen. I've got typical value. I think we looked at this a couple of episodes ago, actually. What was I trying to show here? So we had Melbourne, which has been stagnant the last 3 years, where you look at Perth, which has had significant.
Yes, I remember this from an episode a while back where I think that Perth over this period of time, what's the end date there? Is that that's currently July?
July 2025. We're looking back 3 years. So the idea was like you'd be buying, let's say you used a buyer's agent, you bought a property 3 years ago in Melbourne. I'm just looking at Melbourne as a whole, so I'm sure you could have picked up some markets. It's flat. We're looking at overall Melbourne and overall Perth, but it's pretty much flat, isn't it?
Yeah. So back in July 2022, so 3 years ago, you're making a decision, should I buy in Perth or should I buy in Melbourne? What's the difference? Well, I think there's something like 75% growth for a $600,000 property. I mean, that's incredible. That's the cost of making that wrong decision there is well over $250,000.
Where I would be frustrated is if I've used a buyer's agent back in 2022 and they said, buy in Melbourne, buy in Melbourne, buy in Melbourne, when the data clearly wasn't showing it at the time where Perth was. Perth has had the big boom. Obviously, these buyer's agents haven't looked at any data points, have they? Or they haven't looked at the DSR.
No, but yeah, if it's one of those old school BAs who believe you should always buy in Melbourne, in the blue chip suburbs of Melbourne, then you're always just going to get the average long term growth rate because you're not taking advantage of booms and busts like this boom we can see in Perth recently.
And you can't challenge that. The data's there. How do you challenge this?
Yeah.
How do you challenge it?
They just say, you're welcome to your opinion, Damien. They say over the long term it will outperform.
If I hear long term, I keep hearing that long term.
And again, they haven't looked at the data because if they had, they would realise that over the long term it doesn't outperform.
Well, they'll say you can't time it. Just buy now, buy in this area because it's our backyard. That's where we're going to buy for you. Pay us 25 to 30 grand BA fee and get it done.
Yeah, there's one BA who I've heard say, I don't know, maybe 3 or 4 times I've heard them say, nobody can predict the future. So this is a buyer's agent, right? Well, if that's the case, why would we be hiring your services then?
That's true. Disadvantages and limitations of a buyer's agent. So the first one is the cost can be high. And they vary, I guess, with different buyer's agents. Some of them might do a fixed fee. Others might have a percentage of the asset. So let's say the property's worth, $1 million. They might charge 2.2%. So they might charge 22 grand, or it just might be a set fee. So that would be my only thing. You'd have to factor in the cost of a buyer's agent. The other advantage, and again, you can talk to your tax accountant about this, but normally the BA fee, you can just keep the invoice, and if you do sell down the track, that gets added onto the cost base of the property, so it can reduce your capital gain down the track. So that's just something, look, I'd say that's maybe a bit of a benefit. So you do have that cost there, but still it will reduce your capital gain down the track. You won't get all of it back, but a fair chunk.
Okay.
Which I don't think many people talk about that.
Yeah, that's a good point.
But it is sort of locked up. But if you're a bit more aggressive and do want to use a professional, that's something that you've got there. I think the quality can vary. Back to that point, imagine buying 3 years ago in Melbourne where you could have bought in Perth and you missed out on maybe 50, 60% growth.
I think that point there, that second point, quality varies, that is massive. You think of buying a car. You can buy a high quality, top of the range, whatever, $100,000 vehicle, or maybe bottom of the range, $20,000. You're still going to get what you paid for plus or minus a few $1,000s. But you can pay a $20,000 fee to a buyer's agent and go backwards by $250,000 in a few years. Or you could pay a $15,000 fee to another buyer's agent and go forwards by the same amount. It's the variation in quality is the most dramatic feature about buyer's agents.
The other one is, I guess, possible biases in recommendations. So I guess maybe trying to rush to get you over the line to buy a property. At the end of the day, you're the one that's making the call. All they can do is put everything out in front of you, go, this is the recommendation, this is why, these are the pros, these are the negatives. So as long as you see what those negatives are, I think that as long as that's laid out for you and nothing is hidden, that's the main thing, isn't it?
Yeah, well, there are some, they're not buyer's agents, but they masquerade as being experts that help property investors, and they are selling a development project. They're really glorified real estate agents working on behalf of the developer, and they are appealing to investors, hey, buy in this project. And so their bias would be, this is the project you need to buy in. And if it doesn't suit your price point, well, we can't help you or whatever. But, yeah, there's some tremendous bias by those types.
And the other thing here is, I guess, the commitment. Like you need to be sort of committed to the process. If you're not, you're just going to, if you've got analysis paralysis, you're never going to make a call on it, are you?
Yeah, well, I guess you're handing over that expertise to the buyer's agent, aren't you? Yeah.
And I think one thing I also want to raise is you have to remember, more than likely, a lot of buyer's agent firms, what are they going to have for their employees?
For their employees?
Yeah, what are they going to have? They're going to have targets.
Oh,
they're going to have targets
yeah,
to bring in this
KPI.
amount, and if they don't, so if you do notice any bit of that pressure, that's what you need to be careful on, because a lot of them won't tell you that they've got these targets to hit. And you know what a lot of companies are like, Jeremy? They're going to want more.
Yeah. I think it's if the buyer's agents is putting pressure on the investor to turn over, that's unethical. If you've got plenty of other clients and this client turns their nose up to a particular property, we'll just pass it on to the next client, that sort of thing. But I can understand from the perspective of the buyer's agent, you make money from your time and effort on the ground, and you don't want to go to all this trouble only to have your client turn their nose up at a particular property that you offer them. But at the same time, you've got a human being here who isn't as confident about property investing, and they're nervous and they want to dot the I's and cross the T's. They don't want to be hurried.
And you want to know what your goals are too. You don't want to go in there and then change your goalposts. Okay, my price point's 600, now it's 750, now it's 850. Like a buyer's agent's going to be frustrated because they're looking at a certain pocket and then all of a sudden everything's changing. So you need to be really clear on what your goals are.
Strategy.
When a BA is worth it versus when it's not. So I would say worth it, maybe for a busy professional, maybe you're interstate, maybe chasing unfamiliar markets. That's what I would think. Like, yeah, you can. There's obviously a lot of property courses out there. They're going to say you don't need a buyer's agent. But at the end of the day, if you're doing a property course, you're just focusing on their way of doing things, aren't you? But they might miss gaps that you don't realize. So like I say, I always say look for those clusters. That's where you start.
Yeah, when I think about, let's say I'm going to use a BA personally, my expertise is in the data, in answering that question, where to buy. So I wouldn't need a buyer's agent to answer that question for me. But I don't know about negotiating. I don't know the area for picking the price, whether I'm overpaying or this is good value for money versus bad. So I would lean on a BA for a specific task, and it would be that local knowledge of what's available. But yeah, given my expertise, I wouldn't be worried about choosing a location. Let's say it was someone else, a busy professional, like a lawyer or a heart surgeon or something like that. their expertise is in another area, and they're just leaning on the BA for their expertise. So I guess it comes down to, where is your time best spent? I mean, we've had some clients, high income clients. In fact, you've had hundreds of clients, and you've like pilots, mining engineers. Their time is better spent doing their 9 to 5, and it's rarely ever 9 to 5 if they're earning good coin, and then offloading the responsibility onto a buyer's agent that's just on the blower all the time, hounding real estate agents looking for that good deal.
Yeah, if you can do your own research, you find the pocket you want to invest in, then maybe you can look for maybe like a local buyer's agent potentially, or if you got the time, like I said, you can get someone to do the walkthrough for you. The property is structurally sound. So it really does come down to time. But I would say if you're busy, you don't have the time and you want to lean on someone, that's when they are definitely worth it. I'd say when they're not, maybe you're an experienced investor. You want to do it yourself. You've done a property course, you've learned it, you've got your own process, and that's totally fine. But I wouldn't be wiping out a lot of BAs because there are some good ones out there. And I'd say, like I said, on the ground, this is the way I look at it. Let's say you did a course or something and then you live in Sydney and you're looking to purchase in Melbourne. How are you going to compete maybe with a Melbourne buyer's agent that breathe it? They're there every day. They're on the ground. They're doing the inspections. You're up against it. Where if that market's moving significantly, if you can get in, let's say that extra 2 to 3 months prior, that could be a couple percentage points in capital growth, especially in a moving market.
Measured in tens of thousands of dollars and easily covers the fee of the BA. Yeah, I think interstate investing it's not impossible on your own, but there are some investors who are tremendously capable of doing pretty much anything on their own. And so for them, I don't think they need a buyer's agent, especially an experienced investor. And for me, I consider myself an experienced investor, but I would still use a BA just simply to free myself up from that on the phone all the time, chasing the deal.
And that's what I've realised. Your time is better spent like working within the business, the data, things that we actually do to try and hopefully grow, and obviously the platform and the channel and all that type of stuff. But you're right, like if you can get someone to do all that legwork, bring you the property, and then you can decide, okay, so they've done all that heavy lifting for you and you go yes or no.
Yeah, and another good example, I used to do renovations, do-it-yourself renovations when I was a novice investor, and I had to buy all the equipment, all the materials, and spend my time on weekends and in the evenings. But there's someone that does a better job than me. He's already got all the equipment. He's better, better in every way. Why don't I just focus on my job and they focus on theirs? And in the end, it was just easier to pay people to do the reno. But there are people who just want to do it themselves because they don't trust anyone else. And I think that's fair enough as well.
Well, trust is the hardest thing now, isn't it? With the whole social media and everything, you don't know who to believe. That's
so much marketing fluff out
I think
there.
that would be the first thing. You just have a ton of initial consults with a lot of people and just work out who you actually trust and which avenue that you want to go down. But I brought up an example. This is this is obviously hand-picked. Like I just remember it because I had it written down. But a unit in Harris Park in New South Wales. So they purchased the property. This is one of my past clients. They purchased a unit back in January 2016. For $447,000. 9 years later and 7 months, they sold it for $440,000. So through that pretty much 10 years, they've gone backwards by $7,000.
Well, that is an area where there's been a significant amount of development.
And a big buyer's agent purchased this property for them. When I met with them, they told me, and I was godsmacked to hear that.
Hang on a sec. The buyer's agent purchased
purchased this.
2024?
2016. So they purchased it in 2016 and the client sold it in 2024. So I did a should I sell analysis on it back in September 2021 and I told them to sell it. And it looks like they didn't sell till about, maybe 2.5 years later after I told them to. So that hopefully they could have got out that little bit earlier and gone into maybe like a Perth market as an example.
So hang on a sec. We're talking about an opportunity cost here. This is really 10 years we're talking about.
10 years.
So somewhere else in Australia, it could have doubled in value.
Mm-hmm.
So we are talking about you've spent money on a buyer's agent and you've lost $500,000. Well, you haven't lost it, but you've missed out on $500,000.
I think this is where the accountability needs to be in the industry, and it's not going to happen. But you just look at this, and how frustrated would you be?
Yeah.
And I remember looking at it back then, 2021. I said, "Sell, oversupply, DSR's weak," and they maybe due to, I guess, their personal circumstances, they decide to hold it for another 2.5 years, and ended up selling it for a loss anyway. But that is massive opportunity cost. And look, this is just one case. I'm sure there's buyers agents that have done great, but I think if I was using a buyer's agent, I want to make sure they're taking me to these areas that are at least going to beat the national average. There's just not one pocket. There's plenty of pockets to invest in.
Yeah, well, I mean, I'm sure the national average growth rate over that period of time would have
6
been
to 7%. Brennan.
Yeah, well, that's just matching. So you're not getting ahead of the property market. You're just keeping up with it. They've gone backwards.
And this is a massive buyer's agent firm. I'm sure they would have purchased a lot of properties in these pockets. They would have got paid their hefty BA fee, and there's no repercussions for that.
Yeah.
So this is data. It's not me just saying it as an opinion. This is actual facts.
Now, that may have been a one-off. So that buyer's agency, we don't know all their past performance, but yeah, that's a bad one.
Conclusion. So I think only works if you're really clear and committed. So understanding what your goals are and finding someone that you trust that looks at, I guess, data, I think would be one. Not even just our data, everyone's data to work out where to go. I would always do a sense check of a BA if I was going to engage one. I think that's one. Trust data and the process, not hype. Don't just believe a nice report that you get. Look at the information that's out there.
Yeah, and I would just think if you're an extremely capable sort of person, everything you touch, you just turn to gold. You probably don't need a buyer's agent, but it is going to cost you your time.
The other thing is, I think, like long-term ROI, that's the way I would look at it, not the cost up front of a buyer's agent, like what's their past performance, and really trusting them along the process that they're going to buy your property that is going to outperform over the next 5, 10, 15 years. Obviously, the algorithm's more beneficial around that sort of 3 to 4 year mark. But if you can get that equity as soon as you can, at least you can make the call in 3 to 4 years to either, okay, well, do I sell it now? Has that market slowed down? Or should I just take the equity out and go again? It gives you options, where that scenario before with that unit, you've got no options other to really sell because that market's not growing, is it?
Yeah, that's all you can do, sell. And I think it's interesting that because we're dealing with such large numbers here, $500,000 is an investment property that's considered quite cheap, really. It's lower than the national median. If you are slow to get into a market that's moving at like a couple of percent per month, that's the buyer's agent's fee, and they can get you in there early. Or you just jump in a little too hastily and you overpay by the buyer's agent's fee. So the right buyer's agent, you are better off by, literally hundreds of thousands of dollars versus the wrong buyer's agent. So still something that needs some analysis. But I think picking well is really important.
Before we conclude, how do you find the right buyer's agent?
Yeah, that is a really good question. And I think it comes down to track record. The problem is if you ask a buyer's agent for their track record, they are just going to cherry pick the best and leave out the rest. That's
the challenge. I think that's most probably the hardest bit, is actually finding the buyer's agent.
Yeah. You know what? That is a really good question. I don't have a good answer for it. There's no real solution.
Yeah, I think it's just about doing a lot of due diligence, background check. I think, are they data focused, or are they one of these old school buyer's agents that'll just say, look, go in an area where there's income growth or population growth, just these numbers they shouldn't be looking at, which just frustrates me.
Yeah. Well, that's the thing. Everyone is now saying, oh, we're into data. We're into data. We do data. I was listening to a podcast, maybe I shouldn't mention this, but someone there who is right up the food chain and the buyer's advocacy industry and saying, oh, I'm a data person. And they proceeded to do some analysis, which to me was like the equivalent of a child's scribble with a crayon compared to a Nobel paper on quantum physics. It was just utter rubbish, and they, of course, came to the wrong conclusion. And any research you can do in 10 minutes is not going to be insightful. It's going to be biased and it's going to be rubbish. So it's a marketing thing. Oh, we're into data. We do data. We know data. Don't tell me data. I'm a data person. So even now you can't draw a distinction between a good buyer's agent and a bad one because they're all talking up their data. They've all got their own algorithm.
The challenge is, I think, going to be the cherry picking.
Yeah.
The cherry picking.
You would need a complete list of all their past purchases. They're not going to give you that.
If anyone gets stuck in their process or their journey, they can reach out to us at suburbdata.com.au. We're here to help. We're at the end of the day, we hopefully can guide people in the right direction, even if it's just an initial chat. That's at the end of the day, why are we doing this?
Yeah. So was that an email address or just click on the
they can just go to
green
Suburb
help?
Data. Yeah, just go to suburbdata.com.au. If you get stuck, you can just go to the help section there. We will have a services page way down the track. But like I said, I think even if it's just an initial chat to point people in the right direction, at the end of the day, we've been doing this for a very long time. And if we weren't doing this, I don't know what we'd be doing. I'm not the type to most probably sit on a beach all day and retire now. We still love what we do, but hopefully put our knowledge out there. So just go to our website. But Jez, where can, besides our website?
Well, I was just going to say, if you are at all unsure, if you're 6 of one, half a dozen the other, and ahhing, and you just want some cross-check, there's a couple of things you can do. First of all, whatever that suburb is that the expert has recommended to you, just check out what the demand to supply ratio is. And if you can always ask us.
And I think, we've had someone reach out in the past where we helped them, where we did a should I sell analysis. So had a portfolio. Look, one was okay. It was like a unit in the western suburbs of Sydney. And the other one was like a place in Melbourne, which was land and house. Greenfield, it was just horrendous. So it's we can do should I sell analysis. We've been doing it a long time and we're very objective about it. We look at the data and at the end of the day, we look at the research how we would do it. We'd provide that to the client. And at the end of the day, you make your call as an investor. But just be wary about just holding onto a property that isn't performing because that can just keep holding you back. And look, it's hard. I've been there. It's hard because it's you got to sell the property. You got to pay the selling agent. You got to go buy again. It's not easy.
You got to admit you made a mistake.
I'll put my hand up. When you make the mistake, you put the hand up. So look,
it's a hard thing to do.
Yeah, that's right. So everyone, like the episode, share it with anyone that you think's going to find some value from it. Thanks for tuning in and see you in our next episode. Bye for now and take care.